The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento, and Larry's out, and it's my pleasure to be here and trade what you see. So we'll look at what we're seeing, and what we're seeing here is the 10-minute chart of the E-minis. Trading is down 225 at 2093.25 made. This is really interesting. A 2100.00 exact round number high yesterday, and the 10-minute chart double topped at 15:30, so that's 10 minutes to 4, and then again, no, what am I saying? At 3:30, and then at 20 minutes to 4. And what's really interesting about this, am I correct? Was that 3? 15:30 is 3:30. Yeah, that's right, 3:30 and then 3:40. And what I'd done is I sent out to the den yesterday at this 10-minute chart saying from the low of 2064.25 made at midnight. Was it midnight exactly? Yeah, just about midnight. Well, very next bar was midnight. So right about midnight, Sunday night, going into Monday, there was in the 10-minute chart, a cup formation started to form when peak A, B, C, D. Now, in the Chapman wave methodology, what you look for, 4 higher peaks, like you went here, just 4 higher peaks, and then you got to be somewhat careful because other things can happen. But the objective is to get you to at least peak D, and then there's a different assessment. And now look what's happened. You've gone in the Elliott wave. What I'd said was unusual to go to an exact round number. First of all, in a century level on the S&P, and stop there exactly. No 25 cents, no 75 cents, but 2100, 00. And that makes a peak E in the Chapman wave, the third buy mode. And it was an Elliott wave, and I do this is what I call the Chapman wave interpretation of the Elliott wave. That was 5, and what I said was we've made an Elliott wave 5, so we can expect some kind of a pullback here. It could be more time than price, and lo and behold, we did drop from 2100 down to the 2094 level, 6 points, no big deal after the big move up. But then it went sideways for a long time and only broke that level at about 4 o'clock this morning. Went down all the way to the 2093.50 level. No, 2089 level at 7:30 this morning. Sent out to my subscribers on my opening call the usual charts, and it's this chart right here with the daily. I can't remember now. I don't think I showed the weekly today, but I showed the daily in a larger version of this 120-minute chart. And what I'd said was the 120-minute chart had made a single leg A to the upside, a G or a /A. So we're going to see where support comes in. And at this particular point, you've got a left side, right side. Let me just type this in here. Another Chapman wave technique. LS, left side, to the right side, RS, and that took you to a test of this low here, which was at 2087.75 from 120 yesterday in the afternoon. And this morning's low, as I say, has been 2089, slightly higher. So this is a good sign and says that there could be a test of the 2095.25 area. Then I've drawn in an arch formation because we're going to see whether or not there's some kind of a consolidation intraday in the real market, not the futures, but in the real market. Is there some kind of a consolidation today after such a spectacular move yesterday? A move slightly higher than I was anticipating. Now let's go to the numbers. We've got the E-minis down 2 at the 2100 level, just above the 2095.50 high that was made back on the 18th of August. So this is testing recent highs. And it's very important because 2118.50 is the E-minis all-time high. And this move that I said here in the 120-minute chart, let me just show you patterns. And patterns tend to repeat over and over, except when you get these big spikes to the upside If you go sideways and use time to digest, then you can have another move to the upside. So we're going to see what happens here at 2093.50. I suspect that if we get to the 2098 area, you will be testing that 2100. So this is going to be a very important, I'd say, what is the time now? 9:10. So going into 1 hour's time, 10 minutes past 10, I suspect that at that point we'll have all sorts of moves. They might be small, but there'll be moves in certain stocks that are going to be key to telling us whether the market goes higher from here. Now, so I'm talking about Elliott Wave. In the Elliott Wave, I've been saying to subscribers, there's a real good chance that this is Elliott Wave 5 starting in the longer term. And if that's the case, we should see new highs in the Dow and the S&P. We've already made a new recovery high in the Q. So let's just run the numbers. We've got the dollar at this particular point up, excuse me, the dollar is up 97.39, up 39 cents. I've got 97.31 here, just a little bit behind. Holding the 9-period exponential moving average, having made an E/C in the Chapman wave. Everything about the MACD and the stochastic at 83%, these two technical indicators here, and this particular squash formation in the stochastic and the MACD suggest that when you get to a peak peak C very quickly, you get a pullback, and if the 9-period moving average or some key support holds very well, there's a real good chance you're then going to make a D as the stochastic starts to pull back, and the MACD, the moving average is fast moving average, takes up the momentum. Remember, I like to think of stochastic as torque. This is what gets you from first gear to second gear, or at least gives you the takeoff so that you can start to go to the higher ratio gears. Higher ratio gears, if you're looking at the rev counter, the revolutions, you'll see that sometimes you're starting to move from a very high revolutions per minute to much slower as you can go into the upper gears because you've got the momentum. That's really important. So the dollar had that big spike here, unusual calling it a G. That's the pattern that I call the single leg A failure pattern. So it's either a G or an A. And then it comes all the way back, but it does not break the low in the 120-minute chart of 96.47. And now we've made a cup formation. I'll draw it in here. And I must say that if the dollar continues to rally, there's a chance that the market might rally as well. There's been that symbiosis between the two for a while now. So I'm going to be watching things really closely from here. So let me move this out the way, the 120-minute chart, and show you a couple of things that well, actually, you know what, I'll put it over here because on the shorter term, I want to show you something. The EUR USD, the euro dollar currency pair, is fading. It made a peak D, very quick ABC, fails, holds the left side low, has another ABC, and that C right there continues the wave count, because in the Chapman wave methodology, you want to be as conservative as possible. It behooves you to take the more disciplined approach to say, in this case, we've not broken the low in the dollar of, the euro dollar currency pair of 1.10864 made on the 3rd of September. And you continued high and you went past the peak C of the 18th of September, 1.1459. And that continues kind of a D/C, but you always want to go for the higher count. And the higher count in this case is a D. The stochastic made that very quick U-turn, that arch formation, went over 80% and then under 80% within 3 bars, actually. That's usually a big negative. The 200-period moving average, that coral orangey color right there, that was the resistance. And now you've gone past the 200-period simple moving average right there at 1.109. And the euro-dollar currency pair is acting quite poorly right now. Now, I can show you a couple of patterns here in the Chapman wave methodology. In the weekly chart, there are a couple of fighting patterns. One is this up channel right here, that had a beautiful up channel. And then to fight it was an arch formation. This is what I call the Chapman wave inverted falling X. Wow, all these words. But all it does is it explains what you're looking at. I like to use terms that are explanatory. So that says that the arch formation here is winning because it broke the support level I can take all these away. It's a little messy here. There were a number of arch formations, so I'll take it away. Right there. There, look at that. That is very interesting. Why? Because if you're looking at the MACD, it's turning down, but it hasn't crossed negative yet. But the stochastic's way down, it's very weak. The stochastic's at 33%. This is not good. This is the 120-minute chart, and it's gone peak A, B, C, D, E, and there's your F. So F is where you've got to be very careful. Let me just type it in here. So euro, dollar, currency pair, not good. The dollar, good. Has made a new recovery high, but is acting very well. Now what we're looking at is that if the euro-dollar currency pair sees the if it takes out this low of 1.0896, the low of the 28th, then there's a real good chance that this entire left side series of lows in the 1.080 area is going to be tested. If you're looking at the USD JPY, this is the US dollar Japanese yen currency pair. It's holding well. Now, you remember there was a period way back where I was saying I'm just going to move this 120-minute chart down a little bit right here, put it in the corner so that it's still doing its job, but we can at least see the daily, the weekly, the monthly, and the 120 together. Remember when I said that there was a period where the dollar going into that high of March of 2015 and the dollar of 100.39, what I'd said was the monthly chart is holding beautifully. There could be a sideways formation, and the 9-period moving average, the thick black line here, is going to be very important as support. And then as we're coming into the parallel move, now keep your eye on this one on the right here. I'll put this back in here. Let me just, move that away. Okay. Now keep your eye on this chart right here where I'm circling. Now, here we go again. USD JPY, keep looking. Here we go. See the difference? The difference is that in the currency pair, the dollar went vertically up and went to that peak B. This is an alternate count F/B. So far, I can still keep it as an alternate count, but it's looking more like it could be an F. So this is there's a difference. You see the way the technicals have deteriorated? Actually, I'm going to move that away. See how the technicals have deteriorated in the monthly chart so far? But the price is held. That's a good sign, but you always have to watch those technicals. Keep your eye on the right chart. You see the technicals, how strong they are still. The MACD hasn't turned down. Stochastics just under 80% at 79.94, but it's flattening out. That's a good sign. It keeps the major trend in place. So we're looking at a chance here that this high-level consolidation is going to break to a leg C over the coming 2 months, maybe. As long as it doesn't break 94, say 3 points low, that'll be, that'll say, be careful. So we've got a couple of things that we're looking at here. Basil Chapman sitting in for Larry Pesavento. Trade What You See is the name of the show, and I will be back straight after these messages.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. Basil Chapman. My service here at TFNN is besides the Tiger Technicians Hour, which I do at 11 o'clock till noon Eastern Time every day. There's also, is the opening call, my daily newsletter, very comprehensive newsletter going through all the different indices and the stocks or whatever it is that we're looking to buy or short, whatever. We have a mix now of longs and shorts and quite satisfied with that at this particular point. And so in the den, this is a wonderful medium we have here. It's like a chat room. We don't chat. Nobody really chats, but we discuss stocks or whatever is being focused on at any particular point. So Fletch mentions Bank of America is selling an $87 billion business to BlackRock. And this is very interesting because I'm looking at Bank of America done quite nicely, coming off the 14s and now trading in the 17s. Peak D, remember I spoke about the Peak D, we've had 2 of them so far, and the support level is between 1670 and 1645. That could hold, but a break above 1750 would be very positive, especially for the weekly chart. And right now the weekly chart is in a nice retracement back to the upside. Technicals are not quite confirming yet, but they're okay. And the monthly chart really, I think although it does look like a rectangle, I can actually put in an oval pattern here to say this is something we've got to be aware of. Yep, there's closer to an oval, but there are signs that it has the characteristic of the oval pattern in the Chapman wave. That says, be careful. There could be a sudden spike to a new recovery high above 1848 at some point over the next 2 months. So I'm watching Bank of America. I'm watching all the XLF components very closely. I had an opportunity to get in earlier, but this flat sideways pattern said upside should be fairly limited. And then one more test into the middle of this range, the XLF, this is the S&P Select Financial Spider Fund, trading at 24.37, down 4 cents pre-market, but 24.41 was the close yesterday. I made a peak D with a little doji top, so we have to watch it quite closely. I've drawn in a rectangle formation that has gone above, and that suggests that in the weekly chart, there might have to be just one little bit more of a time, 2 weeks, maybe 10 days to 2 weeks of sideways move to test it mid-23s. And if that holds, we could suddenly see a big explosion to the upside. Certainly, if it breaks down and there's a close in the next 3 weeks below 2270, that'll be a problem. So I'm looking at this and I'm saying, okay, we looked at JP Morgan the other day during my show. This has got a leg C. I think it's going to make a peak C just a tad above 65.83 quite soon. But what's really important about it is that the weekly charts, when you that aberrational spike to the downside, that flash crash basically going to the 50.07 level back on the week of the 28th, though that was August the 24th, of course. What a move from 50 to 65, 15 points. I'd say that's a pretty good percentage, right? Look at the weekly chart. There's that Roman candle. It's not refusing to break down. So JP Morgan, Wells Fargo was another one that was doing very nicely. Wells Fargo has made a peak F top, didn't make the arch formation, instead it made a cup formation, acting pretty good. And Bank of America, BK, Bank of New York, I meant to say Bank of New York, Mellon-Core. Yeah, this is also holding very nicely. It's actually one of the better looking charts out of all the banks. So if you have the banks holding well, any retracement coming up in November suggests very strongly that even a stock like BK, Bank of New York, which is trading at 42.25, has about a 5% risk to the downside, maybe 6%, maybe 7% if it's really ugly. But anywhere in the 41 to 40 area says that's where you need to look at it, because at that stage it's saying that your risk of a move down to the upside potential is the risk reward is actually quite good. So we'll be looking at the technicals there to see if the technicals are actually quite good, if there is a pullback. So a couple of things we want to look at here. We're going to be starting another 2 minutes. Just that'll liquidate my throat. And another couple of minutes, and we'll get the open of the day. But in the meantime, let's just go back to this chart right here. You remember we looked at this and I drew in the arch formation. I have no clue. Look, there are no technicals here. If I do get the technicals, let's go to one with the technicals. This is the 10-minute chart. Here's a 10-minute chart with the technicals. And with the technicals meaning, oh, disappeared. Right there. Nope, that's a 120-minute chart. All right, come back. There you are. Stop hiding. Look at that. You've got... Actually, let me open this up. It'll be very, very interesting. You see the way the MACD has come down, and then you see the huge expansion in the 9-period differential, and you've got a price. But I'll talk about that when we come back. There's also a resistance line right there. Basil Chapman sitting in for Larry Pesavento. Be right back for the opening of the market.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. I was showing the 10-minute chart, what I call the naked chart. Had a 10-minute chart of the E-mini had made an Elliott wave 5, Chapman wave leg E, 2100 round number, exact to the penny. Excuse me, there is no penny. 2100.00. The next one would have been in 25-cent increments. So that's really amazing. And then you had this pullback using time instead of price. But now we've made this. See, I drew in the arch formation. Now I thought I'd grab one of the things with all the technicals that I used, 9-period moving average, all the different moving averages, 200-period moving average, the MACD. You see, the MACD has only just started to turn down in the 9-period differential, and the histogram, these vertical lines, are just starting to shrink, and that's suggesting that there is downside pressure. We in my opening call, we've got a mix of longs and shorts, and this morning we picked up yet another short, 2 shorts actually, and we'll see how they do. But these are very select areas, select conditions, etc. And well, the day's young. What are we? We're not even 5 minutes into the trading day, so this is still very, very young. And as I said, as long as that 9-period moving average differential in the MACD is holding, you've got some strength there. So you cannot, there's no way that you want to pat yourself on the back. I have an expression, when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. So we're going to be watching this real closely. I can't believe that on the second trading day of a new month, after such a spectacular move, that there wouldn't be buyers coming in. It's how that buying is sustained or how it's rejected later on. And my gut feeling is that this week we're going to have some kind of a consolidation, and we'll see what happens. So let's see. A couple of questions in the den. In thinking about purchase of ADC and WPC2 REITs. So let's move this out the way, and we'll look at those. So Peaky says ADC. Let me change that. Okay, here we go. ADC. So ADC is Agree Realty. A pretty agreeable chart formation in the monthly. Look at that. So that look what I do. I grab the most obvious low bar and I put in an up arrow. When you do it historically, you cannot be wrong. I'm looking at that, and there's no way that I'm not correct in putting an up arrow right there. It's the lowest bar on the left for quite a while, and it's the lowest bar on the right. So that we start off, and the thing about Chapman Wave is you want to go from the lowest low bar, merely count each successively higher peak, and you alphabetize it in sequence. A, peak B, 1 penny above B is C, leg C becomes peak C when there is a peak, leg D starts the moment you go above, in this case, 2556, 2557 starts leg D, and there it is, leg D. D can still go to an E, and it does. It goes to an E, and then the MACD stochastic and everything turns down. It didn't turn down there, so this gets a plus sign, and this gets a down arrow. Now you've got to look for a brand new buy signal. So you go trough. On the way down, we call them lowercase trough A, trough B. It's very bullish to only go to a C and then start a new move up. And what does it do? It goes to an A, comes back down, doesn't take that out, instead it starts a B. So we put in B right there. I'm putting in the up arrow because the technicals are all confirming the rally, and it goes to peak C. This would have been confusing. I would have at first put an F/C to continue that move up from E. And then what happens is it pulls back, goes a little gray A because it's underneath the previous A, and then it goes to the requisite D. And D starts to turn down, and it gets a down arrow. It could recycle higher, that's okay, but I'm putting in the down arrow because the MACD and stochastic turned down. But the MACD was flat, and that's suggesting that that might just turn into a plus sign if it starts to move above this 35, what is this exactly? 36.15 high of January. Then I would say, you know what? That flatness of the MACD, stochastic turning back up after not going under 20%, says this is quite good. So yes, I like it. I think that it's monthly chart is still looking more positive than negative. Now let's go to the weekly chart. Weekly charts is very obviously, that's a down, a serious down move. You've gone to over 80% in the stochastic already. The MACD is already very strong. So this is an A and then a B. So the weekly chart, now I'm going to open up the weekly chart, is showing you that this made, let me just double check here. You always have to go back enough. If there are questions, I can go back all the way to 1974. I don't care what it is. I want to know that I've got it exactly right, or at least as near as possible. So this is that May spike. Yep, this is that April 2014. There was a spike down. Hit the 200 period moving average. Do I count that? A, B, C fails. All right, so this is what we're looking at here. 2969, 2968. You see the two little bars here? So I'm taking this as the most obvious low bar, and I'm going A, is that a B? Yep, B, C, and there's your D. So I do like this. I think it's acting very well. Now let's go to the daily to see where an entry would be. ADC, Agree Realty, down 34 cents at 32.67. Okay, now what we've got is we're going to start the daily. Always check to see exactly whether or not, look, that low bar right there is at 27.74. This one is at 27.75. So yes, that's the low. So we go peak A. And it's good to be looking at these REITs because I think that as dividend stocks, they're going to become somewhat attractive in this environment. So we're looking at it. So this is A, another one, B, C, D, E, and an F. All right, so you've had yourself two buy modes, and now you've had a pretty serious decline from the 34.07 level on the 28th of October, and it's still holding the 9-period moving average. So let me put this in to finish up what we're looking at, that and that, and that and that, and that and that. So I've got it down. I really can't, it's a peak F, and almost always at a peak F, I put a down arrow. But the thing that makes me a little hesitant here is that, see the MACD still holding quite well? So we've got to be a little bit careful. So here we go. In the context of what would I do? I would say the two things that I would do. One is it is acting very well, and it has participated beautifully from the August 24th low. So this is a participator with the market. So I'm going to make two suggestions. One is an ADC. You could nibble right here at 32.67. When I say nibble, I mean, if let's say you're going to buy 100, I'd buy no more than 20 right now. I'd like to give it just a little time to see if it's going to hold. It's at 32.67. If it's going to hold the moving average, 9-period moving average of 32.40. Let's say that we want the low of the 30th of 32.30. That's going to be key. So I'd hold off doing anything other than starting a little position here. I need to also look at the 120-minute chart. That's right there. Yep, the 120-minute chart says the same thing. Just an arch formation is forming. I'd be a little bit careful. Just a small position. It's really a starter position to get a feel because you've just had an A, B, C, D, E, and an F and a G, unusual G at the top at 34.07. So it needs a little time. I would give it a little time, a little nibble here. The real thing is how does it test the low of 32.30? That's going to be very important. And if it holds 32.30, and in fact doesn't even go there, in fact, if it takes out 33.01, that was the high of yesterday, I would add another, same thing, small position. Just getting a starter position. It looks to me like it needs to consolidate sideways, so I wouldn't get too carried away. But as a dividend stock, I would include the dividend in the safety factor of support. So let's just say it gives a 3.25% dividend. I'm just saying, I have no idea. Then I would add the 3.5%, and I'd say, okay, the next time it pulls back, if it does pull back into the 32.20s, so you've lost 40 cents, you've lost 1.5%, give it just a little bit of time and maybe just a little bit extra leeway before you decide whether you want to cut loose or whether you continue holding. I'm looking at the potential to make a cup formation. That's really what I'm looking at. And that cup formation says the 32s should hold as support. And if it does hold, and then it starts to travel into the 33.30 area, that would be very nice action. Okay, I hope that helps you. So, and the full position, it's a little late now for a full position until other things happen. So it's just the two small positions that I'd be looking at under those conditions. All right, so now let's go on. And WPC was the next one. I'll just do WPC. Something tells me that it's familiar. Now that one's holding way better. WPC is WP Carry Inc., the monthly chart. Actually, it's very interesting. The daily chart is really nice. Oh, as I'm talking, it just popped 12 cents, 64.75. I like it a lot. I like it a lot better. It's more, it's higher price. I don't know whether it's more expensive, but it's higher price. So let me put this in, and I'm going to do a little bit of work on this myself. ADC, was it? ADC and WPC. All right. And I'll put Peaky's question. All right, good. So let's go on. And I want you to look at, let's look at this chart that we were looking at before. There it is. Okay, so here we, oh, this is not even D. This is still C. And you've gone to the upper band. I have to raise this now. Well, if it can go to D, then I've got to raise it even more because you've got to get a pullback, and then you get your D. All right, no big deal. we're watching this closely. This is the pattern I'm looking at here. Some kind of consolidation today early on, and then I think buyers might want to come in, and then towards the end of the day into tomorrow, we'll see if the money is running out for the new funds for the November, and then we start to get that pullback, that anticipated pullback on the week. Okay, a couple of things that I want to look at here. You remember Amazon last week in my show? I was looking at it. I said it's making a leg D, and then it pulled back, and then it broke out and it started an E. Well, this is very interesting because the MACD, the moving average convergence divergence, is a little bit overbought. The 120-minute chart has got an A, B, C, D, E, F. So it could pull back here. The stochastics are really strong at 96%. So to get the stochastic back into the mid-80s, you'd have to see a plunge that almost probably has to go under 611, which is the 9-period exponential moving average. Amazon's at 625, 626 right now, down just over 2 points. But it's holding really well. It could have a sideways consolidation. Everything about the chart says it looks fantastic, but on a shorter-term basis, upside might be limited to about the 635-ish area, maybe 639. But the downside says there's a real good chance that at some point over the next 2 weeks, not only will the 611 be tested with 598 and the gap up level of 592, what was it? 595.36. So that's what I'm looking at, just consolidation. If this really does go sideways for 2-3 weeks and then breaks to the 650s, I have to tell you that the buying is going to become quite intense. People are going to, the short covering is going to be quite heavy. Let's look at my Dow quartet. GE is actually holding quite nicely. Yes, down 3 cents at 29.38, holding the 9-period moving average, and a spectacular move from 1937. I don't know who got it at 1937, but that's fantastic. On 24th of August. And now it's at 29.40. Hit 29.83 the other day. Looks very much like it wants to go to the 30s based on the weekly chart, but we'll see how any consolidation yet takes place. You're looking at IBM, which has been very poor. Just a horrible chart. Having a decent data up 46 cents at 140.90. The weekly chart and monthly charts as well. Yeah, it could have another bounce, but the monthly chart is really very poor. And then you've got TFNN, which had a fabulous day yesterday. The days is, I've got a G/C in the daily, and that suggests it really should go to a D. So at 159, down 59 cents, I think that it has a good chance to go to 160.50 to maybe 161, and then I think it's going to have a little timeout, and that's based on the 120-minute chart, CD, so it's A, B, C, D, E, F. Interesting. Okay. Well, I think it's real close to some kind of a consolidation, but it is fabulous, looking great. And the weekly chart and monthly charts are looking tremendous. UTX didn't have such a great session. It's holding okay. It's really struggling. And that's more my intermediate term Dow indicator. G is my shorter term. And I'm thinking, you know what? UTX had a great move from 85.50 on September the 24th all the way to over 100, 15, 16 points. It deserves a little bit of a break. It's in a breather. The weekly chart is starting to improve. So now let me go back to a question. Basil, did you cover gold? No, Danny, I'm going to do it right now. I was waiting for you. Danny, here we go. Gold, very poor. Made a peak D, hit that Chapman wave inside track resistance area. Hitting the support right now of that same up channel. I don't like it. The MACD and stochastic are very poor. Dollar is, you see, I did the dollar before, but I didn't do gold because the dollar looks to me like it wants to go to leg D above 97.82, the dollar index. Gold, on the other hand, looks to me like there's a bit of a problem here in that arch formation that goes to the lowercase h to the lowercase m is really still continuing, and this is the same kind of support. So, and I'll talk about gold when I get back, okay? Basil Chapman sitting for Larry Pesavento. Dow's up 5, S&P's down 3.5. Be right back.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks, we're back. So we're talking in the den. Danny and Lando want to know about gold. So gold is, now it's just broken the, it's down 12 at 1123.40. It's just broken the key support. The MACD and stochastic are very poor. If you look at the GLD also made a peak D in the daily chart, and it has broken that support. It's gapped down quite a few days, but of course, I don't. When you talk about anything that trades overseas before us, you're always going to find gaps, so that's not the big deal. The big deal here is that the weekly chart here as well is forming that H pattern. So within any market, you've got to have winners and losers. And in this particular case, the commodities, I think I showed it yesterday, just they haven't really had, they've had some very nice shorter term runs, but they really haven't picked up speed. So the commodity index is, you see, here's the gold chart. And it's really important when looking at the gold chart to consider that the The monthly chart, 9-period moving average of the GLD is at 110.25. It has not closed above this moving average, which is obviously coming down, except for once. It did a spike back in January of this year in the monthly chart, and then it failed. It did it again in June, was it? No, July. Yeah, June of last year, went to 128.04, and then the price went under the 9-period moving average. But ever since it broke down, back in December of 2012, the last rally of 2 bars above, 3, 4, 5 bars above the 9-period moving average, and then it broke down. It has not closed above that 9-period moving average more than twice. I mean, in all the months. This is just not a good sign yet. I'm sure there's going to be a fabulous rally in gold. I think it's coming up later, not yet. So, okay. Time is almost up. Is that right? Whoa, time just went zipping along. I'll be back for the next hour, and stay tuned, because right at 10 o'clock, you've got the stock market update with Tom O'Brien, and then there's the Money Master show. Then I'll be back for my opening call. Meantime, I'll show you this chart of the arch formation with no technicals, just some trend lines, and the Chapman wave notation of the 10-minute E-mini chart right here. Okay, now in this particular chart, what we're looking at is if this cup formation hadn't formed, when I see a continuous time move, but not price, in a narrowed down channel, the big move, there's usually a big move to the upside coming. If that wasn't there, this probably would have been a bigger move. So you've got almost like a sine wave with a bump, flat, bump, and now we're testing the level. If 2087 goes on the E-minis, be careful. Hey.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.